Hi there. My name is Philip Williams. I'm the chairman and CEO of Consolidated Uranium. We're a uranium developer with a global portfolio of projects, including past producing mines in the US, in Utah, which we're advancing back towards production.
Philip, thank you very much for the introduction. Good to see you again. We've met in the past in Southern Africa, but here we are, face to face over the delightful ether. It's been a torrid. Good to see you too. It's been a torrid time in the market, hasn't it? We've all been living through this risk-off environment, and junior mining as a whole has seen its kind of valuation beaten up a bit, and yet countercurrent to that, the uranium price just kind of ticks along. So we're in a slightly strange place for uranium companies at the moment, wouldn't you say?
Oh, absolutely. I mean, the last year has been difficult for equities, but as you point out, the uranium price is still holding in relatively strong at just around $50. It peaked at $60 about a year ago. And so uranium price down $10, equities down 50, 60%. It's upside down as far as I'm concerned. And I think it represents a good opportunity for investors.
Yeah, absolutely. And the uranium narrative is certainly gaining credence. You've probably seen that it's nuclear industry has been classified as a green industry now in the EU. So it's becoming more mainstream, even though it's still quite niche.
Well, 100%. I mean, this conversation about critical minerals, critical metals has to include uranium. And increasingly around the globe, we're seeing countries and jurisdictions recognize that uranium has that place. Canada, where we have some projects, has uranium on the critical minerals list. In fact, there's incentives to explore for uranium in Canada, which is very positive. And I think we're going to see that happen in more of the jurisdictions that we're in going forward.
Now, as a company, part of your strategy has been to build a portfolio of uranium properties, uranium projects around the world. You've been pretty busy over the last couple of years. You were last on Crux, I think, in July of this year. Can you just, for the benefit of viewers or listeners, give a summary of what the portfolio looks like now?
Yeah, no, absolutely. And you're entirely right. And so when we started the company in early 2020, it was the depths of despair for uranium. But myself and the original founders of the company, which include the teams behind NextGen and Mega Uranium, some names that the audience might be familiar with, we sat around and we said that better times are coming for uranium. At the same time, there were projects around the world that had historic resources, lots of capital spent on them in the past, but they were sitting kind of orphaned and forgotten about. So we set about to roll up these projects into Consolidated Uranium. We've acquired 19 projects now around the world in 4 jurisdictions, 4 of the better jurisdictions in our opinion for uranium, and that being Australia, Canada, the US, and Argentina. We've been busy every year since our formation, and since we last spoke last July, we've acquired a number of additional projects in Australia, really bolstered that portfolio and brought some critical mass in that country. The biggest transaction that we've completed in our history, we closed earlier this year. That was of the Virginia Energy, so that was a public markets transaction. We acquired that company, and it came with the Coles Hill deposit, which is located in Virginia in the United States. It's the largest undeveloped uranium project in the country at over 160 million pounds of uranium. And so that, again, that's the most significant transaction we've done to date and significantly bolstered our uranium resource endowment in the country, in the company.
And yet it's so interesting, isn't it? Because you go through this acquisition, you build up your portfolio, and when the mood in the market isn't there, you kind of need a catalyst to get that share price moving in the right direction. So are you done now on consolidation? Are you going to be shifting to investing in unlocking value on the existing portfolio, or are you still on the acquisition trail?
Yeah, look, I think it's a bit of both, and you're entirely right. So I think what we've found, particularly in down markets, is the digesting of some of these acquisitions has taken a bit of a toll on the share price, and where, for example, in the Virginia transaction, where you had this company was a single asset, single jurisdiction company, and their shareholders have been long suffering, quite frankly. When they came over to CUR, saw some liquidity in a bad market, I think some of them took the opportunity to exit. So I think we'll be a lot more judicious about our acquisition strategy going forward. But we certainly see opportunities, particularly where some of the companies that we're looking at, and that have the assets that we're looking at, are depressed and looking for solutions. And I think people are recognizing that being part of a bigger, stronger company, more able to access capital, better liquidity, better profile in the market. I think they're recognizing that joining up with us makes a lot of sense. But I think again we'll be more judicious. But I think your second point is entirely accurate. We're very much focused now on unlocking the value of these assets that we put together because we bought them for a reason. We see tremendous value in them, particularly together in the portfolio. So we're doing a lot of work, and again, particularly in the U.S. this year, to show the markets that our assets have a pathway forward, particularly to very near-term production at those past-producing mines in Utah.
Thank you for that answer. In your quarterly results document, there's a nice diagram that you've got kind of outlining your strategy, which talks about some of the long-term call options, and in that you include Coles Hill and Matoush. Then you've got a kind of the midterm strategy, which is kind of the M&A, the unpacking, maybe spinning some assets out, which makes me think that as you build your portfolio, you're going to perhaps use some of these as trading chips, because in the world of junior mining, development assets are hungry children. You can't keep all 15 children or all 19 children alive. You've got to sell some off to develop others. And then in your near-term suite, you've got the Tony M mine and the Daneros and the Rim mine. You just mentioned those as all being in Utah. That's where you're going to be focusing. Could you just kind of outline the kind of the work program for those three, and kind of how your budget is going to be allocated between the three of them?
Yeah, absolutely. And so the majority of our budget for the year is on those three assets. We've just finished a drill program at Daneros. It was part of a larger program, but we finished 5 holes earlier this year, and the core is in the lab right now for assays, and we'll have those results back shortly. At Tony M, which is the kind of the biggest of the projects, and the project that we recently put an updated 43101 resource out on. We intend to do and that was based on an 8-hole program, confirmation drill program that we did last year. We're in the process of permitting a 30-hole program there, and also permitting opening up the underground to go in and do some sampling. One of the very interesting results out of that report was where the historically the project had never really been looked at for its vanadium potential. We got values back in our drilling that suggested you could see something on the order of a 3 or 4 to 1 vanadium to uranium ratio at the project, just based on those 8 holes that we did. Previously, the project the holes had not been chemically assayed; they'd just been probed, which is a very common technique, particularly in the U.S. So there's an opportunity for us to go back in and whether it's through new drilling, whether it's underground sampling, test that vanadium potential. And it could be quite a significant addition if you're talking, we have 8.8 million pounds in both the indicated and inferred category of uranium at that project. If you're talking about 3 or 4 to 1 ratio, you could be talking about sort of 25 to 35 million pounds of vanadium at $10 a pound or thereabouts today. That could be a significant value increase for that project. And all of this is setting us up for making a go back into production decision. And I'll go on about Tony M because there's a lot to say, but Tony M was one of the past producing mines in the last cycle. Tremendous amount of infrastructure there. 18 miles of underground development was put in. About $50 million was spent in the 80s by Consumers Power on the project. Surface infrastructure, $15 million was spent by Denison, and the mine, and 1 million pounds were taken out of this mine. All of the permits are in good standing, such that we could bring it back into production very, very quickly for a low amount of additional capital because, as I just pointed out, it's a fully developed mine with all the surface infrastructure. So there aren't big capital projects. It's really a working capital issue. Go in with contract miners, keep the ore out, and send it to the mill for processing.
You talk about measured and indicated resources. When you say 8.8 million pounds, is that combined? Is that the...
That's combined. It's about two-thirds in indicated and a third in inferred. But there's 1.5 million feet of drilling on this project. This is a very, very well drilled, very well understood project resource.
So is that 1.5 million feet? Is that included into that resource calculation, or is it?
Yes. Yes.
Okay, got it.
Yes. Sorry, just to kind of carry on from that, we drilled 8 confirmation holes, which allowed the SLR, who were the authors of the independent technical report, to then go and rely on those historic results as part of their resource calculation.
With the vanadium assays, you must, I mean, that changes the economics of this of the resource entirely. No, well, not entirely, but I mean significantly. You're going to have a different revenue split between the old concept of 100% uranium with potentially some vanadium kicker to actually, let's do the economics on this, let's do the studies. This might be 50-60 or 2/3 1/3 or whatever the mix is. There's going to be a kind of a well-defined split between vanadium potential and uranium potential.
Absolutely, and the important thing to point out about that, and because there's lots of projects around the world that would have uranium or whatever the main commodity is plus some byproducts, but can you actually recover that byproduct? We're sending all of our ore to the White Mesa Mill, which is owned by Energy Fuels. It has a vanadium circuit. It recovers vanadium from these deposits historically, and it can recover it from this deposit. So we can actually achieve value for that byproduct credit, if indeed we can prove it up through the additional work that we're planning to do this year.
So you've got underground development, you've got surface development, and you've got toll treating arrangement through Energy Fuels, who are presumably still a 19.9% shareholder.
Yeah, they're around 17% right now, but yes, okay. They're still a major shareholder.
Major shareholder. So, what's the timeline and what's the timeline to actually starting production? Because that's a game changer, surely, for the company.
Well, we believe it is, and so the timeline is dependent on a few different things. So there's the stuff that we can control, which is how fast could we move it into production if we hit the button today. And we're really talking about 3 to 6 months. And it's a function of the permits all being in place, the development done, where we do have some work to activate those permits. We have to open up the portals. We have to get in to see what the state of the underground workings are. We believe they're in good shape, but people haven't been down there for quite some time. Hire a contract miner and get going. So on our side, we think that's a 3 to 6 month exercise. On the other side, we do need a higher uranium price. So,
okay.
So full stop. We're not going to do it at today's price. At $50 uranium, we're not opening this mine. I'll be very clear about that. And then on the other side, the mill itself is not operating for fresh ore at the moment. And so we need Energy Fuels to make that decision to turn the mine on. And their guidance in their latest quarterly was it's not going to happen this year. So in my estimation, it's a 2024 exercise to turn the mill back on. But that timing works really well with what we're doing. We're not rushing things. And you pointed out the economic study. We do plan to do a PA on this project. So once we've completed that drill program and some of the underground work, we'll take all of that information and all the current quotes around contract mining, shipping, et cetera, and put together a PEA so we can really understand the economics of the project and what that uranium price we do require to bring it back, to put it back in production is.
Have you got a timeline for that PEA?
So we haven't engaged anyone to do it yet. My goal and what I'm telling the team internally is I want to have that out by the end of the year.
What are you talking about in terms of grade for vanadium and for the uranium?
So the uranium comes in at about 0.28% U3O8, which actually ranks it as one of the highest the highest uranium project grades outside of the Athabasca Basin. That's the global average. I think increasingly again outside of the Athabasca Basin is sitting sub 0.1% at 0.28%. We're 3 times higher. And then if you look at the vanadium grade, and again this is all indicative. We have to do the work to prove this up, but the early indications are a sort of 3 or 4 to 1 ratio of vanadium to uranium. So call it 0.91% vanadium, again, which would be very high grade for vanadium on its own on a world scale.
Yeah.
And those ratios are very consistent with what we see in this part of the world.
Well, that'll be a value catalyst for the company, surely.
We absolutely believe so, and it kind of came out of the blue. It wasn't something that we were expecting, but because we did the chemical assays for the first time on this project, we got information that previous operators didn't have.
And for Energy Fuels to restart the White Mesa Mill, what they say they're looking for 2024. Is that contingent on availability of material, or is it a uranium price expectation that they're working on there?
So, I think it's nuanced. It's got those questions for sure are part of their decision matrix. The availability of material, I can tell you that, Energy Fuels is working on developing some of their conventional assets, whether it's the Cell Complex or at the Pinion project in Arizona. Those projects are getting ready to be able to deliver feed to the mill. They have some stockpiles at the mill right now from some other sources, and then they're definitely looking at our mines as potential feed. And so together we would look to be able to provide that circa 100,000 tons of ore that's required that they would like to see in order to start the mill up. Price, again, would be a consideration for them. They have been entering contracts for with utilities to deliver new material, and those contracts start to feather in around. Some of it would be, a small amount would be this year, 2024, 2025. So that's so we're starting to get close to that point where I think they would make that decision. But again, I think pricing will play a key role in that decision matrix. And then some of the other things they're doing at the mill. Right now, they're very focused and working extremely hard on doing rare earth separation at the mill and making great strides on that front. And so there's a dynamic of you can only do one or the other at the mill, rare earths or uranium. And so there's a lot of different factors that will go into their decision.
And the 30 drill holes that you're going to be doing during the course of this year, when might you start that? Presumably, you've got to get your permits to drill that. Are you thinking this is something that'll happen in the second half of the year?
I think sooner than that. I think we should be in there before the end of the second quarter. I have to sign some papers just now for the put the permit in. But we permitted last year's program, and we have no reason to think that it's gonna take very long to get the permits complete. So I would say we're starting that program in the next 2 to 3 months. And
that will principally be to corroborate the understanding of the vanadium relationship with the uranium, because the uranium, as you said, is well drilled.
Correct, and a little bit of extensional drilling. We think we have most of the deposit already covered, of course, by that tremendous amount of historic drilling. But there's a few areas where we see potential to expand, but largely to just go see if that vanadium those vanadium values are consistent across the ore body.
Good, thank you. I feel as if I understand the situation at Tony M much better now. Next, Daneros.
Yes.
Or Danaros.
Daneros, yes.
Daneros. It sounds like something out of the Game of Thrones.
Yeah, that's right. Well, Daneros is a fascinating project. I mean, it's completely different than Tony M in the sense that, and it's a very typical style of mineralization down in this part of the world. Even higher grade than Tony M by historic standards at 0.3, and in some cases higher. But these are where Tony M is flat lying and quite expansive. These ore bodies tend to pinch and swell, and you kind of have to chase them. So we did some work on drilling just now, and I said we'll have some results from that. But the next step with Danaros is really just to open it up and start mining. It's dry. It can be mined with a very small team. I believe the last time they mined it, they had half a dozen people at the project. It's not a tremendous amount of work or people or infrastructure required to turn it on. So as part of our, we won't go ahead and do a PA on Daneros. I think that when the time is right, particularly as the market looks right and the mill is getting closer to being opened, we'll just go in with some contract miners. And we may do, one of the interesting things about these kinds of mines, say, versus in situ projects or much bigger projects, is you can go in and kind of batch them. So even Energy Fuels had a test mining study done where it was go in and take 10,000 tons out of it and then send it to the ore. And you can kind of turn it on and off. And so you can respond to the market very, very quickly. If you have an in-situ project, once you start pumping licks of it into that deposit, you can't just stop. You have to keep going. And then, and not even to mention the remediation that has to happen at the end of a mine life, or if you build a big plant, or you open up a large open pit or underground mine, you've got to keep going. So we think it adds a lot of flexibility to our business plan, particularly if we get some spikes in the uranium price. We can pull quite high grade ore out of there very, very quickly and send it to the mill. And it's it actually makes, the historic studies show that it makes very good blending ore for some of the other ores in the region. It does not have vanadium in it, but it is very high grade.
You said you're not going to do a PA on it, but you must have an understanding, kind of an internal thought about what kind of uranium price would get you guys sharpening your pencils and calling up the mining contractors. What is that uranium price?
Look, I think realistically it has to be $65, $70 for us to think about turning this on. And you know, it's kind of, we got to understand a lot of it's going to be shipping costs, mining costs, and some of the inputs around that. We know inflationary pressure has come into all of mining, and it won't be unique to these projects. And so, you know, again, I think that's why there's a very big disconnect between the current price and what price all mines need, uranium mines particularly, to get into production. But so for us, definitely 65 to 70 is the kind of level that we're going to need to see to turn this mine on, and likely Tony M as well.
It's funny, isn't it, that word disconnect? It kind of keeps coming back. I see it in all of these critical minerals conversations, the disconnect between the amount of capital available for the battery projects and yet the amount of capital that's available for junior mining. But it's particularly the case in uranium because it's so rare to find an entire sector where so many projects just don't work at metal prices, current metal prices. And you know, you're not alone by suggesting that you need a uranium price of $65 or $70. You can point to almost every uranium project around the world which needs that. Does that ever worry you?
I mean, it actually does not worry me. I mean, we've built Consolidated for torque to the uranium price, and I believe that's coming. I think it should worry the utilities, quite frankly, because I think that they're living off this fallacy of that this price is the price, and they're going to get unlimited amount of production at these prices. Yes, there are some amazing projects around the world that can make money at current prices, but that is not the case for the marginal amount of production that's required, but even deeper into the cost curve than that. And then I think if you use history as a guide, uranium mines have underperformed consistently. So if you sit around as a utility or even an analyst or anyone looking at the space and you say, oh, here are all the mines that are going to come into production, and here's all the production that they're going to deliver over this timetable, those numbers are all going to be wrong. We're going to underperform. We're going to deliver less material over less time. And so if you plug those into your supply models and go, okay, we're balanced and we're in a fine position, you're going to be wrong. And so those factors will come home to roost. And that's what we saw in that bull market of 05, 06, 07. And once price starts to move, it can move very, very quickly. And these utilities will ultimately have to chase those much higher prices and sign contracts at levels that are required to either get these mines up and running or keep them running.
So you've effectively got that talk through two routes. One is you've got mines that can be turned on quickly, kind of almost like turnkey mines, albeit on very small volumes. I mean, I haven't even spoken about the volume at Daneros, but it's probably small.
Very small. I mean, we'll produce. We could produce, and this is based on historic production rates, we could produce 250, 300,000 pounds out of Daneros a year. So you're right. This is not, globally significant production, but I think you nailed it, Rowan, is we can be very, very quick to market with that material. Between Tony M, Daneros, and Rim Mine, which we haven't touched on yet, I think we can do 1 million to 1.25 million pounds per year out of those three mines when they're all up and running. And
then the other element of talk is that when the uranium price is running and everyone's like, oh, I've got to find some uranium projects, that's when you can leverage your your kind of your portfolio tail, should we say?
No, absolutely, and that's entirely how we've constructed it. And you talked about those long-term call options, and what we have in Coles Hill and Matoush are two very unique ore bodies. One at Coles Hill, as I talked about, is the largest undeveloped project in the U.S., and the U.S. is becoming every day strategically more important as a place for domestic uranium production, where it's going to be required to feed that big fleet that they have and provide security of supply internally to the country. And then we have the Matoush project in Quebec, which is, we talked about Tony M being high grade at 0.28%. In the indicated category, it's 0.96% U3O8. That actually ranks it as, I think, maybe the highest, if not the top 3 highest grade undeveloped projects in the world outside of the Athabasca Basin. It's a tremendous opportunity. Both of those projects currently have hurdles to moving them forward, and not dissimilar to lots of uranium projects around the world, which can be hot button projects. But if we can unlock those hurdles and make some progress, particularly on the permitting front or the social acceptance front, as the case is in Quebec, there's tremendous value to unlock in those assets.
Good. Well, let's talk about the rim mine, because otherwise it'll be it'll be feeling left out.
Yeah, look, rim is more of an analog to Daneros, although it does have vanadium, very high grade vanadium at 1.8%. Again, that would rank it as one of the highest grade vanadium projects on its own. About 0.2% uranium. Rim was also in production in the past cycle, has most of the capex already into it. There is one work project that we have to do there. The shaft has collapsed, and so we're doing some engineering work right now to assess whether rehabbing that is possible or uprimming a new shaft. And we've done a drill program there as well. We think there's exploration potential. And we put out some results last year. This year, we're not planning to do much more work there. It's going to be really the focus is on Tony M, but it's sitting, again, fully permitted and ready to go when the time is right.
And when you talk about an analog to Daneros, and when you talk about, let's say, production of 1 to 1.2 million pounds per annum, presumably kind of 500,000 to 600,000 from the combination of Rim and Daneros, and then the other 50% from Tony M.
Exactly.
Great. I understand it. I hope this. I hope I understand it.
It's complicated because we've done a lot. We brought a lot of projects into the portfolio, but I think as you talk about that graphic that we put into our financials for that Q3, we're trying to show people how what might have looked like a disparate package of assets. And again, we were opportunistic. We were buying things at pennies on the dollar, whether it's historically what was spent on the project or the market caps of the various entities that held these assets. But now we're morphing into a company that's actually working on its projects, and we're trying to lead people to water in terms of what the strategy is, because I don't think you can really invest in a company where you don't understand what the strategy is. So we want to try to be clear with people, and I think. I think you get it.
That's why we're here. Hopefully, if I can learn about it and articulate it with you, it'll help the viewers and the listeners learn about it at the same time. The next question I've got is about your shareholder register, because in the uranium space, there are a few well-known uranium funds, and they tend to be have waterfront investments. Are they present in your shareholder register? I mean, have you got the list of kind of the 10 or so funds that everybody knows about?
Yeah, absolutely. They've all participated in financing. So since inception of the company, we've raised about $50 million in equity financings, and we're talking going back to 2020 now. And along the way, all of the ones that I think you're talking about have invested, and in many cases they've participated in multiple rounds, if not all of the rounds. The ones that we can mention that are disclosed would be Mega Uranium, and they were one of the cornerstone founding shareholders. They have actually vended assets into the company, and there's a fund called Sachem Cove, and they're a very well-known uranium investor, again, just disclosed on our register, and then the rest of the group. And so it's investors in the U.S., in Europe, in Australia, Canada, of course, who have all participated in the company and supported us from day zero.
What's the kind of the breakdown, more or less? You've got 17% with the energy fuels. What's institutions, management, and then retail or other?
So I think at the last count, management had sort of 5-6%. Energy fuels at 17%. I would say, institutional investors would get you up to sort of 50 to 60%, and then the balance would be retail.
Yeah, gotcha. Thank you. What price was the last capital raise at, and how much cash have you got left?
So we raised $20 million at the end of 2021 at $265 a share. And right now we're sitting on about $16 million.
Your budget, so I'm just looking through the work program that you've got for 2023, presumably is a fraction of that, or not a dominant portion of that.
Yeah, so we'll spend about $5 million in the U.S. this year, and probably $1 million to $2 million on our other projects, and then corporate costs. Probably
somewhere in the range of kind of $9 to $10 million kind of total expenditure for the, or maybe a bit less for the.
Maybe a bit less, but in that.
Thank you. Now I think you mentioned either it was in the interview or in the pre-talk about it being kind of a buying opportunity with the share price where it is relative to the past 12 months. What would you say to someone who said, "Well, I could just come back and buy it in a if the trajectory continues, I can just come back in a few months and buy it at a it'll probably be at a lower price."
Yeah, look, I mean, I would say that there's a number of catalysts for the company, and I think we just articulated a number of them that have to do with the projects themselves. What we don't know for sure is how the results from those programs might impact the share price. I think where we're sitting in the market today, it's really a momentum market. It's less about what one individual company, what activity a company is doing specifically, other than, for example, if you make a brand new discovery in the Athabasca Basin, you can disconnect from the group. But I think that if you're a believer in the uranium market, as we are, and I don't see much downside in the price itself. It seems to be quite resilient. Uranium price, that is, seems to be quite resilient in testing this $50 level. I do see a tremendous amount of upside potential. I've never been able to call exactly when that potential is going to be realized, and I'm certainly not going to be right if I tell you. But I do think that we can get back to $60 before the end of the year, and I think that's a pretty conservative statement that I think will be proven out. The stocks will rise, and then it's about and ultimately what I've always been thinking about what needs to happen in this market, because we have seen a lot of new names created in the uranium space, and a lot of names that, quite frankly, we're chasing a trend, and it's a perfectly acceptable business model, and it happens in mining time and time again. And some of those people chasing the business model can be the real stories, but ultimately there will be a washout in the space. And so you need to be a stock picker. You need to go where you think there's a management team that knows what they're doing, assets that will deliver value, and I think, quite frankly, we're sitting, based on our portfolio relative to our peers, we're at a big discount to our peers, even though we've performed relatively in line with them on an equity value. I don't think that it's reflective of the strength of the portfolio of assets that we put together, and the pathways that we have to drive to move those assets forward and recognize that value. So I think there's a potential, and whether it happens today or next month, I can't be sure of that. But I think it's when the market does move, I think not only will we trade in line with the other uranium names, but I think we have all of the potential to outperform, a good subset of them, particularly because of how much leverage we have to the uranium price. If the uranium price is moving, we unlock so much more value in our portfolio than some of the other companies, because of how big it is and because of the torque that we have, particularly in that back end of the portfolio. Oh, well, and as you point out, in the front end, because we can deliver material very quickly into the market if it does spike.
And you've got the cash as well, so you're not boxed into a corner like so many other junior companies are this year.
Correct. Absolutely. And there's supportive shareholders who will back us even if that was the circumstance.
Philip, thank you very much. It's been a real pleasure getting to know the company better. Good luck with the year ahead.
Thank you. Really great to talk to you, Marilla.